Traders at UBA said the bond market has been characterized by moderate sell bias at the short end of the curve, particularly on the January 2026 and March 2027 papers. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates as investors await the outcome of today's Treasury bills auction. Chuka, thank you so much for taking the time out to join us today.
Thank you.
Well, let's start with that Treasury bills auction. Well, earlier today we didn't get news, but just for you to bring us up to speed, do we have results out yet?
No, the results are not out
Okay,
yet.
so if that is the case, could you just share with us expectations around subscription levels and the rates that the market is expecting?
All right, so the TB auction, DMO is offering about 143 billion. The last auction 1 year came out at 10.17, and then we expect that this auction will also dip further between 8.5 to 9.5%. So we feel that because of so much liquidity in the system, the yield will depress further because a lot of investors will look to invest some of this liquidity into the TBO side.
All right, then now let's have you bring us up to speed on trading market action today, starting with the money market and, of course, across the other segments.
Yeah, like I mentioned earlier, the money market is slightly liquid. I mean, it's quite liquid, not slightly. The liquidity in the system is well over 600 billion. This is as a result of some of the coupon, the maturities of last week, as well as coupon payments that was paid also last week. So that has actually filtered into the T-bills market. We've seen the rate hover around 8% for the last 1 year. The last 1 year that came out around 8% and then 7.5%. And so though it's been the market has generally been quiet, which is typical of every auction day, but we believe that once the results are out, we'll probably see a depress in the yield.
Now, when the market is this liquid, how long does it typically take for that liquidity to seep out of the market? Or what has been the trend in the last couple of weeks?
The market can be liquid in 1 minute, in this minute, and the next minute the liquidity goes out, especially when you have week such as this, where you have a NTB auction. Tomorrow will be settlement. Obviously, some of this liquidity will go out. And then there's a retail auction on Friday. So those will kind of take out a lot of liquidity in the system. So I don't see this liquidity, this robust going into next week and then beyond. And again, also let me mention that there will also be a bond auction next week, so that will further reduce the liquidity we have in the system.
Now, also on our radar is, of course, that the April inflation numbers. Investors keeping an eye on that in terms of how much. We're expecting. The general consensus is that there would be an increase, but what is the market expecting? Yeah,
the market is also expecting an increase. The last inflation figure came out at 22.04%. So it might not get to as high as 25%, but obviously the market expect that the inflation will slightly go up, maybe around 22.9 or 23%.
Okay, let's quickly talk about the FX market. I know usually it's typically quiet, but I did note, seeing your notes where you said I did lose about 1 naira. Was that at the INE and NAFEX? And also beyond that, you could comment on that, but also I wanted to ask, as you know, the Dangote refinery is going to be commissioned on the 22nd of this month, and we have heard the company say that it could help Nigeria save up to $10 billion, I believe, annually, and also help the country earn that same amount in export. I wonder, how much of a game changer could that be for our FX reserves from an accretion point?
Yeah, the FS market, the INE, is currently trading at 462 levels. It's been trading at this level for quite some time. And then on the Dangote refinery taken up pretty soon. That obviously will reduce the amount of FX that we make provision for in order to purchase some of these, bring in some of these refined products. So for me, it's a good thing for the country. It will help us save. It will also help us cushion our reserve, which obviously has greatly been duplicated based on the some of the demand, especially on the petrol side. So it will give the naira the needed appreciation, and then obviously it will also help the general economy as well.
All right, let's talk about your outlook for trading for the rest of the week. What can we expect from the yield curve on both, of course, T-bills and the bonds?
Yeah, the outlook for the week will definitely be affected by the result of this auction. And so if the auction comes out as expected, maybe around 8.5 to 9.5, where we will see the secondary market decrease further to around 6 or 6.5%. The bond side is also has been quiet, but we expect that the activity we've seen on the shorter end around 2026 and then 2028 will continue in terms of people selling off their assets, these bonds, in order to in anticipation for higher yield. So
right.
the pattern will follow the same as we've had so far, quiet but very cautiously.
All right, thank you so much, Chuka. Always a pleasure to have you on the show. Thank you for your time today. That was Chuka Nwachukwu, Head ALM and Balance Sheet Management at UBA, taking us through trading today at the fixed income market here in Nigeria.